Back when I worked for the IRS as a revenue officer, we used to make cold calls to either people's homes or to their place of business. They don't really do that so much anymore because the world is not the same and it's just not safe to just show up at someone's house these days. But I remember one time I went to an office, I believe it was an insurance company, and I walked in and I, had my badge and, all of my publications and letters and everything, and I explained who I was. And the guy reached down into his drawer and he pulled out a stack of letters this thick, and he goes, "Oh, I was just waiting for someone to show up." And I thought, well, you received all these notices, like, why didn't you respond? Why didn't you contact IRS? And he said, "Oh, I just figured at some point you'd show up." So I said all that to say that when the IRS sends you notices, I know it can be overwhelming and I know it can be a bit scary, but don't ignore them. And so today we're going to go through what the actual IRS collection process is, how you can handle these things yourselves, and maybe when it's time for you to figure out if you need to hire someone to help. So let's talk about the IRS collection process. So the first step in the IRS collection process comes when you actually file your tax return. So you file your tax return. At the bottom, it gives you an amount that you owe. When you don't pay when you file your tax return, or if you haven't made estimated tax payments leading up to filing your tax returns, then in about 2 weeks, the IRS will send you a notice. The first notice is sort of like a warm and fuzzy, like, "Hey, we got your tax return. Thanks so much. But just a reminder, you owe X amount of money." That notice is usually what's called a CP-14. And a CP-14 is just that friendly reminder that says, "Hey girl, you filed your taxes, but you didn't pay. So you got some time, but send us our money." If you still don't respond to that notice, the next notice that you received is either a CP-501 or a CP-503. Now, those are more urgent. They have a different tone than the CP-514. And it's like, "Hi, we sent you a notice before, and now your penalty and interest is piling up. This is the amount that you owe, and you have 30 days from the date of this notice to either pay us or contact us, or we'll take the next step." So if you don't respond or contact the IRS and you still haven't paid, the next letter you get is what's called a CP-504. So a CP-504, the wording is a little bit stronger, and it literally says like final notice before levy or something like that at the top. And that's the IRS's way of saying, "Hey, we've already sent you these nice letters and you ignored us. And so now we're going to have to start taking some action." Now, I'm going to stop here and say that is the final notice before levy action can be taken. But depending on the amount that you owe, levies may or may not be issued. And I'm not going to tell you to ignore it, but what I am going to say is that the IRS does have certain threshold levels of taxes that are more important than others. So you might get a CP-504 notice that says you owe $15 or $150 or $3,000. In that instance, that is a little less severe than if you owe $300,000. But we even have clients who owe upwards of $300,000, $400,000, $500,000, and the IRS still has not taken enforcement action. Part of that reason is because literally they just don't have the staff and the manpower to handle all of it. But they do have what's called automated collection. And so if they have your bank account, or if you are a federal contractor, if you're a doctor who receives Medicare payments, if you're on Social Security, those type of instances, the IRS computers can levy you, and it doesn't have to be an actual person hitting the button. And so if you fall into any of those categories, I would definitely say don't mess around, respond to the notices, contact IRS, and try to work something out. Now, all of the letters that we just talked about are, again, automated letters. They're sent by the IRS computers, and that's when your case is in what's called ACS, or Automated Collection Services. If you owe over a certain amount, and I think right now that amount is like $1 million, if you owe over $1 million, Or if you are a business owner and you have employees and you have not paid your payroll taxes, in those cases, your case will be referred to a field or a revenue officer to proceed with collection. So the more you owe, again, in personal taxes or in business taxes or in payroll taxes, that's when it gets serious and your case is referred to a field revenue officer. So the next notice that you'll get, well, it's kind of changed a little bit because, again, the IRS no longer lets the revenue officers make initial contact with you in the field. Now they send you like an appointment letter, and I believe it's a 728 letter if you owe taxes and a 729 letter if you haven't filed your tax returns. But they'll send you an appointment letter going, hey, I'm RO so-and-so. Your case has been assigned to me. I would like to meet with you on, Tuesday, August 15th. Come to my office at 10 a.m., yada, yada, yada. Again, at this point, you need to take action. You need to contact that revenue officer, and you might say, hey, I can't come to your office on a random Tuesday. You're like, is there something else we can work out? 9 times out of 10, you can handle all of this by phone. You don't have to have an in-person meeting. Again, if it's business taxes or payroll taxes, and that's something that we'll talk about in a future video. But if it's payroll taxes and there's a little bit more involved, then you probably will have to sit down and talk to a revenue officer. If it's just self-employment tax or income tax, then 9 times out of 10, it can be handled over the phone. They will probably ask you to submit bank statements, proof of expenses. They might take a financial with you over the phone. And then once they've analyzed your financials, then they'll come back to you and go, hey, based on your financials, this is how much you can pay. Again, we'll discuss in a later video how to handle financial statements and what the IRS's idea of allowable and what you can pay and how that differs from you. But we'll talk about that in a future video. So if you still ignore that nice, warm and fuzzy letter that goes, hey, I want to meet with you, let's talk about it, then that's when the revenue officer will take the next step. They will issue what's called a 1058 letter. And that 1058 letter has very strong language. It has very bold writing at the top. And it says, hey, you need to call me because I'm about to levy your wages, take your bank account. I'm about to file a lien that attaches to your property. You've been ignoring us. You've received all these notices. You haven't responded. So now you have 30 days to contact me, or I'm going to move forward with collection action. And that's kind of where I was with that taxpayer that I talked about in the beginning of the video, because he had a stack of every single notice that he had received unopened. He never opened them, but he was just like, hey, I know at some point somebody's going to show up and we can talk about it. Again, they don't do that anymore. They don't just show up at your home anymore or just show up at your business. So if you ignore the nice communication and you ignore this final notice, then they don't really have any responsibility to try to reach out to you again. They've done all that they need to do to fulfill the legal obligations that's set forth by Congress, and they can move forward with collection action. Again, we'll talk about liens in a different video, but most of the time, once they send those first couple of notices and you don't respond, if your tax liability is over $5,000, then the IRS will file a lien. It goes to your county recorder or your county office, and it attaches to all property, real and personal, current and future. So that means, let's say today you don't own a house, the IRS files a lien against you, but 6 years go by, right? And in 6 years you get married, you forgot all about that old tax liability. You get married, you and your new spouse buy a house. 4 years from then you decide, we're gonna sell our house. The market is great, we've got some equity, we're gonna sell our house. Well, guess what? When the title company does a search on your property, that lien is gonna show up. What does that mean? You haven't responded to the IRS. You haven't dealt with your tax obligation. And now that lien attaches to your property. So you and your spouse thought you guys were going to get $300,000 from the sale of this house, but you're really only going to get $100,000 because you owe the IRS $200,000 because for the last 9-10 years, you haven't responded to them. So seems a little harsh, but that's the reality of the IRS collection process. And again, their goal is to help you resolve it. It's not about sticking it to you or, trying to take your house. They don't want you to not feed your kids. They're not about garnishing your wages. But the longer you take ignoring and not responding to these notices, then they have no choice but to escalate. And then that's when they stick it to you. And they're like, hey, we've been trying to talk to you for years and you have not responded. So I'm just going to briefly talk about what your options are in terms of resolving your tax liability. And again, I feel bad because I keep saying this, but we're going to talk in depth later on about each of these in more detail. But you really have like 3 options. The first option is pay your taxes. If you know that you owe the taxes, your tax returns were filed, no mistakes were made, you didn't make estimated tax payment, you didn't have enough taken out of your paycheck, then you owe the taxes and you need to pay them. So you can pay them in full, or you can try to set up a payment plan. Again, a payment plan is based on what the IRS determines you can pay, not what you determine you can pay. So 9 times out of 10, you can go online. If you owe less than $50,000, you can go onto the IRS website and try to set up a payment plan yourself. If it's easy peasy, again, if it's just income tax or self-employment tax, not payroll tax, you can set up a payment plan online if you owe less than $50,000. The IRS has 10 years to collect from you, but they will usually set up a payment plan with you for about 72 to 84 months. So you can put in how much you want to pay. So let's say you owe the IRS $10,000, you want to pay $10 a month. They're not taking that. I think the lowest that they'll take is $25 a month. But again, penalties and interest are going to continue to accrue. So if you take the full 72 or 84 months to pay off a $10,000 liability, by the end of that period, you've probably paid double of what the actual tax was. So number 1, pay in full. Number 2, set up a payment plan. Your third option is what's called currently not collectible or hardship. That means, hey, like I know I owe this money, but I'm not working right now, or, I'm barely making ends meet. I'm making minimum wage. I got 3 kids. My husband's not working, whatever the case may be. In that case, again, you would do a financial statement. And if your expenses exceed your income, if your allowable expenses exceed your income, then the IRS will go, dang, you know what? You're really not able to make a payment right now. You're in a bad financial position. So what we're going to do is we're going to put this case on hold, put you in currently not collectible status for say 2 years. Usually it's 2 years, and then they'll come back and they'll review your financials after 2 years and go, hey, has your situation improved? If not, then we'll go out for another 2 years. That's one scenario. The other one is if you file your tax returns in the next year and your income has hit a certain threshold, and they don't usually tell us what that threshold is, but if your income has hit a certain threshold, they go, hey, now let's take a look at your financials again and let's determine if you can pay. So number 1, pay in full. Number 2, set up a payment plan. Number 3, currently not collectible. The last option, which is a video all in of itself, is what's called an offering compromise. So I'm just going to touch on this really briefly because I'm going to say that the majority of you who are working, who are under the age of 70, who own a business, you're not going to qualify. And I'm going to put like an asterisk on that. Like, you're probably not going to qualify for an offering compromise. But that's those commercials that you hear where they're like, oh, the IRS has this great program where you can pay pennies on the dollar. That's what an offering compromise is. So it's basically saying to the IRS, hey, I owe you $10,000, but I just can't pay that. I'm probably never going to be able to pay that, but I'm willing to give you $500 and just have you go away. Is that a real thing? Yes. Are the criteria for an offering compromise very specific and very stringent? Yes. So I would say if you think you qualify for an offering compromise, this is when you need to do one of 2 things. Number 1, there is a pre-qualifier tool on the IRS's website. You can put in all your information and it'll literally tell you at the end whether or not you qualify for an offer in compromise. The second thing is to hire a reputable, I'm going to say it again, hire a reputable tax professional. So either a CPA or an enrolled agent to help you determine if you qualify for an offer in compromise. But before doing that, I would go onto the IRS's website, fill out the pre-qualifier, because if you fill out the pre-qualifier and it tells you that you're not going to qualify for an offer in compromise, then there's no point for you contacting a tax professional, again, with an asterisk. But I don't want you to contact one of these companies that promises you things that they can't fulfill. So if you contact the company first and they go, absolutely, you can get an offer in compromise, you just need to pay us $30,000, $40,000 and we're going to wipe all this tax debt away. You do that, then they submit the paperwork and the IRS comes back to you and goes, hey, we can get more from you out of a payment plan, or we'd be more willing to put you on a hardship for 2 years than walk away from $500,000, $600,000, $700,000 of debt. So now you've spent money paying this company that you could have spent paying the IRS, and you're still not going to get the offer in compromise. So I went on a tangent and I apologize, because that burns me up, because we'll get people who come to us who have paid companies that they heard on the radio or companies who sent them a letter, $30,000, $40,000 on a $60,000, $70,000 tax liability. And we're like, even as a revenue officer, I would see this, I could see it in the bank statements, and I'm like, if you had $30,000 to turn over to this company, why didn't you turn $30,000 over to the IRS, reduce your tax liability, and then we could have worked with you? But sorry, I digress. Okay, so let's just finish this up. So the IRS collection process starts when you file your tax return. You file your tax return, you have a balance due on your tax return, and you don't pay it. The IRS sends you notices. The IRS will have somebody contact you. Now I think they do actually make phone calls if they have your information, your telephone number. I believe they do make phone calls now. And so 99.9% of the time, the phone number will be an 801 phone number, or it'll come, so that's Utah, or it'll come from Memphis, because even field revenue officers here in Los Angeles, when they call from the office, it'll be an 801 phone number. So I don't know how they make that voodoo work. But if you get a phone call from someone that says they're from the IRS, make sure they provide you with the information before you provide them with the information. They may say to you, what are the last 4 digits of your social security number? They will never ask you for your full social security number over the phone. They will never say, provide me with your address. What you would say to them is, what information do you have? And then you can confirm or deny if you feel comfortable. But the other thing I would say is, if you're not sure, get a phone number from that person. You ask for their ID number. You ask for their post of duty. If they're in ACS, you ask what officer they're calling from. You get a phone number. You get their manager's name. You get information, and then you can either Google it or you can call it back and see what information you get. But by all means, if someone calls and just starts asking you all these questions and asking you for personal information and where do you bank and where do you work, and don't give them all that information over the phone until you have confirmed that they are in fact working for IRS. Sorry, I keep going off on tangents. Okay, so you file your tax return, you're contacted by IRS personnel by letter, by mail, and then you know what your options are. You can set up a payment plan, you can full pay, you can be a hardship, and then if it's really, really a serious situation and you don't feel like you can handle it, then that's when you reach out to a tax professional for help. So the IRS collection process itself is designed to keep escalating until you take action. The whole point of the process is to get you to take action and do something about your tax liability. If you don't do that, unfortunately, it can be painful, it can be costly, and it can be a real nightmare to try to get out of the collection pit from hell once you've gotten in that. But most IRS employees who know what they're doing are really trained to try to help you. It's not about beating you while you're down. It's really about beating you upside the head to get you to recognize that you need to do something about the situation that you're in. So I hope that solves a little bit of the mystery for you. Again, we're going to have, more videos that go into further details later on, outlining each of these steps more in detail. And I'm going to also do a video that helps you know when you should hire a tax professional and what you should be looking for. So I hope this video has been helpful, and I will see you again on the next one. Bye.